and I want to talk a little bit about my analysis. You know, how I use technical analysis to analyze the markets, in my own trading. So the first thing I want to talk about is a very basic concept: drawing trend lines. Trend lines are basically the backbone of technical analysis. So here we have a sample trend line. It connects the low here, uh, it acted as support, which means when it hit this level, it went up afterwards, couldn't get below it here, and then it broke down below this level that formerly was acting as support, and pulled back up to it. So this is a breakdown in here when the market goes below a basic up trend line, then and especially when it goes below and then pulls back, as this market did, then it's definitely a very bearish signal. Then you have what are referred to as internal trend lines. So we have this internal trend line here. Let me get rid of the external trend line. Internal trend line here is within the overall trend. So if the overall trend was that line I was talking about earlier, then this would be the internal trend, especially for the short term. So this is another level that, if you were more conservative, you would wait to sell short, or to sell before getting below that. Of course, I like to because this is about my trading. I think I personally like to get out as soon as I get even like a signal like this breaking down below a short-term trend line like this. I would definitely get out, maybe even sell short. Why? Because you know, you can always get back in afterwards, but if the market flashes you a danger signal, you have to get out. It's just I don't think that's really an option. I just think you should get out straight away. Another thing I want to talk about. Let's get rid of these. Another thing I wanted to talk about today was horizontal support and resistance. So these are levels that come across like this, and are levels that did not move up and down like a vertical line would, instead are across. These levels are areas that have acted as both support and resistance in the past. So, for example, this level here was support, resistance, then support here, then then resistance here, then support again here, all through there, and then resistance again there. Support and resistance these areas act as. And again, when you break down below one of these levels, it's bearish, it indicates bearishness. Come above, it's bullishness. And very important thing to remember here is support, once broken, becomes resistance, and resistance, once broken, becomes support. That's very important when you're doing technical analysis. Another thing that people use for support and resistance, and this is a big monthly chart, so anyway, another thing people use is moving averages. And so I'm just going to edit this here really quickly. Moving averages, I like to use a simple moving average, and the most important moving average you can look at is the 40-day here. So you can see it acts resistance here, support here, resistance is acting as resistance right now. That's all for today. I'm TSDTRADER, and this is basic technical analysis.